Hi, welcome to the fifth session of SAP HCM training. Today's session is about accounts payable. In today's session, we will be covering the above points. First, overview on accounts payable, define vendor account groups, number ranges for vendor account groups, define vendor tolerance, creation of GL as reconciliation accounts, vendor master payment terms, define cash discount for outgoing payments, creation of vendor master records, and unit testing. Coming to the overview part, accounts payable module is the first subledger to FIGL used for managing vendors. It is an integral part of purchasing system, hence most of the data in accounts payable module is obtained from material management module. Even it is integrated with treasury module and accounts receivable module as well. So AP module allows you to manage the most complex of AP transactions. With SAP's accounts payable system, a company can easily manage its payment to provide maximum cash discount and avail cash position on its liabilities. So in simple terms, accounts payable records and administers accounting data for all vendors. It delivers and invoices are managed according to vendors, and payables are paid with payment programs. This is a very important part of FICO. Vendor account groups. Vendor account groups is the key concept in accounts payable. The account group is a classifying feature within the vendor master records. It controls the number ranges of vendor account and the vendor status in the vendor master records. Even vendor groups allows you to have separate purposes and field status for different types of vendors. For example, you could have a group of regular vendor or a group of domestic vendor and a group of one-time vendors. By separating these different types of vendors into different vendor groups, you can make different fields required, optional, or suppressed for each of the groups. The first step in the configuration of vendor master data is to create your vendor groups. Once you have gathered all your requirements and know what the groups should be, you are ready to go for the configurations. Now take a live example. When you do the implementation or configuration for the AP module in any of the client, you first group your vendors in that particular organization into different groups, because you could be providing services or selling goods to number of different groups. Like there could be a domestic group, there could be a retail vendor group, or there could be a wholesale vendor group, there could be a service group as well, service vendor group. So in what way you want to manage your vendors, accordingly you make those groups. These groups are made because you could have a simple reports on the basis of that. In today's world, the management is more interested in knowing what is the total purchases from the domestic vendor, what is the purchases of services from the vendor, how much total retail purchases have been done or wholesale purchases have been done. So if you make these groups of vendors, you can easily have those reports from SAP system. Even you can segregate your vendors on the basis of those groups, and it becomes easier to identify whether a particular vendor of yours is a service vendor, or is a domestic vendor, or is an import vendor, what kind of a vendor he is. That is why we always create vendor groups. Moving to the next, as we already did in the GL, a unique number range is assigned to each business partner master records. Business partner master records means the vendor master records. Unique number is to access the vendor master record. A number range can be valid for more than one account group. Number range could be externally or internally. If you remember, in the last to last session we did general ledger configuration. In that also we talked about account group. That account group refers to general ledger account group, where we made the grouping of accounts like asset, liabilities, expenses and revenues, and we defined a number range to them. A grouping of asset was done, a range was defined. For liabilities, revenues or expenses, a range was defined. That means that particular series will be used for asset, for liabilities or for respective expenses or revenues. Same way over here we define a range to the group. You could use the same range for all the groups. You could define different range to different groups as well. It depends upon you which group, what number you want to take it as. You want to maintain the same number for all the groups, or you want to have separate number ranges for different vendor groups. We prefer to put different number range for different vendor groups because it becomes easier to identify with that particular initials of the number range that refers to a particular group, which part of the group, whether it is a part of a service vendor group or a one-time vendor group or maybe a domestic vendor group, whichever it may be. And that particular range is defined to the number vendor account groups, on the basis of which whenever you create any vendor master, that number is assigned as an automatic vendor master number by the system. Now, number range could be externally or internally. It depends upon you whether you want to go internally or externally, but as a standard practice one should go with the internally defined number ranges. If you go for externally, you have to maintain those external codes somewhere in your Excel, and later on when you create the next vendor, you have to go and cross check what was the last you have put up as a number range as a vendor code. So defining internally so that the system could easily identify and generate automatic number is preferred. Just like an example, you can see these are the account groups with you. You could have these different groups of vendors. It could be a material vendor who supplies you raw materials, semi-finished goods to you. You can assign that particular material group or raw material vendor group as well. You can say a different number range could be assigned to them. Even there are two number range over here in material vendor, because you may have two different groups. Like you could have one as a raw material vendor group, you could have a different one as semi-finished material vendor group. So it's up to you whether you want to classify in those two parts or you just want to have it as material vendor, and accordingly you can have the number range, and later on we assign this number range to the group so that linking can be done and system could easily identify. Same way you can have a different number ranges for service vendors, for finance vendors, for one-time vendor, and for any other vendors like import vendor, domestic vendor or anything as such. So in this way you need to define your vendor groups, and accordingly you define your number ranges to them so that it can generate its own code with that respective group, and it will be easier for you to identifying in the business. Moving next is to vendor tolerance group. Tolerance is basically is used for cash discount and differences in payment processing. Tolerance limits can be defined either as an absolute amount or as a percentage of amount received or paid. As we did in the GL, we defined tolerance for cash discount, for payment differences. Even we defined tolerance as an absolute amount for as well as the percentage for differences in payment as well, if you remember. So these things restrict the system that you cannot give discount above than what tolerance has been fixed, or you cannot give more payment or less payment than the differences from the invoice, and you can assign that particular absolute amount or a percentage to them, and the system checks according to that, and it take care of this of what the payment you are doing and all. Vendor tolerance account, sorry, vendor reconciliation account. Reconciliation accounts are managed implicitly using subledger function. The reconciliation account ensures integration of vendor subledger into the general ledger. More often, reconciliation accounts are managed implicitly using subledger. As said, when you post transactions to a subsidiary ledger, which is termed as subledger over here, like vendor subledger, the system automatically posts the same data to the general ledger. It automatically posts to the general ledger because we assign that reconciliation account to the vendor subledger. That is why it automatically posts to the general ledger. So you need to assign one reconciliation, because the reason behind that is whatever financials you prepare, financials are prepared on the basis of the ledgers. So until you assign any ledger to the vendor subledger, how the value from the vendor will flow to the ledger? So the logic is, so as to flow the value to the general ledgers, you need to assign that particular ledger to vendor account, and that is what is termed as reconciliation account. Means the ledger which you assign in the vendor master is termed as reconciliation account. As you can see over here, there are different groups of, these are different vendor groups, which is in green part, sorry, in yellow part, and these are different vendors. Now in the orange part, these are termed as the reconciliation account. You create reconciliation ledger account as domestic, import vendor or other vendors, raw material, other than raw material or other vendors, and you assign those ledgers in these vendor masters on the green part. If you want to flow the values of vendor 1 in domestic vendors, then you need to assign the domestic vendor reconciliation ledger to vendor 1 master data. Same way, if you want to get the values posted to import vendor, then you need to assign the import vendor reconciliation ledger to the vendor 2, and accordingly the system picks the values and posts it to the ledger accounts. Payment terms. Key for defining payment terms composed of cash discount percentages and payment periods. Payment term is used in sales orders, purchase orders, and invoices. Terms of payment provide information for cash management, payment transactions. Now moving on more on it, payment term is used basically to define, to know, or the system will let you know which of the invoices are due for payment. First. Second, if you make an early payment, how much cash discount will you be receiving? So when we create a payment term, we define how much due date or how much the term of payment will be, so that the payment could be processed accordingly. So the system automatically let you know when the payment is due, and if you make any payment before the due date, the system will also let you know the cash discount if you have maintained the cash discount percentages and time period on it. So payment term basically calculate your cash discounts, and it let you know the payment periods when the payment for the vendor is due for the invoices. Defining cash discount for outgoing payments. Here we define the account number for cash discount received account. The system posts the cash discount amount to these accounts when clearing open items in the vendors. Now, when you make payments to any of the vendor invoices, at times you get cash discount when you make early payments. So the cash discount will obviously go to certain ledger account, so that ledger will take the values to the income statement. So that ledger account is assigned over here as a customization part, and that is what we will be looking in when we will be doing the configurations in SAP. Creation of vendor master records. Vendor master is a subsidiary ledger of sundry creditors.